What's up everybody? Nate here. So the housing market in the United States has been in a really weird spot lately. We've seen interest rates go down to nearly 0% in 2020 and in 2021, all while at the same time, housing prices have gone straight through the roof, no pun intended, and housing inventory has dropped to near decade lows. Now there is a couple really strange things happening in the housing market right now. You have interest rates starting to rise, and you're starting to have inventory improve in the United States, but not for a good reason. Mortgage delinquencies actually increased for the first time in a long time in February 2022. But with all of that still happening, housing prices and sales are still setting new records every single day, which has now led CNN and the Federal Reserve of St. Louis to say the United States housing market is in a bubble. And that bubble is just now starting to grow. So today I want to kind of give my thoughts and my honest reactions to the Federal Reserve of St. Louis and CNN saying that the housing market is in a bubble right now. I want to go over all of the reasons why they think that the housing market is in a bubble, and if I truly believe the housing market is in a bubble this year. In addition, we're going to talk about what could be coming next for the housing market in 2022 and how all of this is going to affect the United States economy and your wallet this year and in 2023. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that, and now let's talk all about the housing market and a potential bubble that could be brewing in the United States. So housing bubble talk has been going on for a very long time in the US. As early as 2020, experts and investors have been saying that the housing market could be in a bubble. A bubble referring to that everything just seems to go up and up and up forever, which is really against the fundamentals of the entire industry. Meaning there's no real reason why it should be going up, and yet it continues to go up. All of this pretty much started back when the pandemic first began because interest rates were dropped all the way down to zero, and the United States federal government was giving Americans thousands of dollars in stimulus. Now, a lot of Americans needed this money, but some Americans already had a steady income and used this cash as their starter fund to buy their first home, or their second home, or their third home. So Americans started to buy homes in mass. And not only that, but you also had some investment companies go into the market and get even better deals and rates on buying a home. They're going to turn this home into an investment property, which sucked up inventory on top of low inventory from regular everyday Americans. But even though interest rates are starting to rise right now and inventory is still extremely low in the United States, prices and demand are still extremely high, which really makes no sense to real estate experts and investors. I mean, eventually prices have to stop going up because Americans simply won't be able to afford a home. If they go up forever, then something else must be happening in our economy. There must be more stimulus, or Americans must be making a lot more money now. I mean, that's really the only way to explain it, but those two things really aren't happening. There is really no stimulus. The mortgage moratorium program and renting program have been stopped in the United States, so people who own homes and people who are renting now have to start paying those two things again. Additionally, while wages have gone up in the United States, they are nowhere near inflation, and housing prices are currently outpacing wage growth. And this is the first point that CNN and the Federal Reserve of St. Louis mention when they talk about a housing bubble. Prices are getting way too out of control. Housing prices just don't make any sense right now. I mean, Americans are willing to put down $20,000 and $30,000 and even $50,000 plus above asking price for a home. Where exactly are they getting all this money? The problem is they're really not. Americans right now are most likely spending beyond their means in order to get a home. And there are two major reasons for this. For one, they have to spend over their means because if they want a home, that's the price they're going to pay. And two, the Federal Reserve announced in March of 2022 that they're going to start increasing interest rates. And immediately they're increasing interest rates by 0.25% or 25 basis points. That means across the country, interest rates for mortgages and personal loans and anything that requires a loan is going up over the next few months. For the last 2 years, interest rates have been at 0%. So it's been really easy for Americans to go out and get a loan at a low cost to them. So with interest rates going up, Americans are scared that this might be their last chance to be able to afford to get a home. In February 2022, inflation hit a near over 40-year high of around 7.9%. And it's been steadily rising every single month for pretty much the last year and a half. That is massively eating into Americans' budgets, so it's harder for them to afford just basic everyday necessities, let alone a new house. So with inflation going up and housing prices going up, Americans are stuck. If they don't get a house right now, they're afraid they're never going to get one. The Federal Reserve said in its recent announcement that it wants to raise rates even more depending on how our economy reacts. If for the most part the economy reacts positively, then they want to raise interest rates 6 more times in 2022 alone. And then they want to raise them 3 times in 2023 and potentially 1 more time in 2024. That means we could see interest rates go from 0% to well over 2% in just a few short months. And right now, a 30-year fixed mortgage on average is gonna be around the 4 to 5% mark for most Americans. That's already way higher than it was just a few short months ago, meaning Americans are now spending hundreds of additional dollars on their mortgage every single month. Money that a lot of Americans just can't afford. Some of them can barely afford it right now because they're really pushing their means, but they really want a house because they don't want to miss this opportunity before it's gone. The second thing that has led the Federal Reserve and CNN to believe that the housing market is in a bubble right now is these super high home prices compared to the price of rent throughout the United States. Because the housing market has exploded all throughout the country, this has made getting a home super rare and super difficult. Home prices have gone way up and mortgage rates have gone way up even though inventory has gone down, and home buyers continue to buy homes. Not everyone though is going to be able to afford a home because interest rates are going up and prices go up too. There's going to be millions of buyers who are simply priced out of the market. But what you got to remember is we're not talking about extra guac at Chipotle here. We're talking about a living expense, something that people literally live in every single day and is basically a necessity for survival. What I'm getting at here is people have to live somewhere, whether that's back in your parents' basement or it's renting an apartment or a home. But the problem is, as more people have been pushed out of the market, they've been forced to start renting. As you can probably guess, this has led to some pretty serious supply and demand issues in the renters market as well. There are simply just not enough places for people to rent right now, sending rent prices through the roof in 2021 and now in 2022. It costs a lot to live anywhere, so people are once again living with a ton of roommates in order to meet those costs. And the biggest difference between renting and owning a home is when you rent, you're not building any equity in that home. I'm not going to sit here and say that your home is an investment because I truly don't believe that, because a home just costs you money and it's going to cost you a lot more than it makes you over time, even with these crazy housing prices. But depending on how much you put down on your home and how much you actually build in equity over time, you can end up actually owning something by the end of your mortgage. With renting, while you do have the flexibility of changing where you live from time to time, you don't actually own anything. All of your rent payments go towards the landlord or the homeowner. So you're spending all of this money in rent, and by the end of your lease, you pretty much have nothing to show for it. Renting costs you money, and while it used to be a lot cheaper to rent a house or an apartment in general, now it's about the same. And that confuses a lot of Americans because you're getting a lot less, but you're spending the same amount, which has pushed even more Americans into buying a home because it just seems like it makes a lot more sense right now. And the last thing that the Federal Reserve of St. Louis and CNN mention about this current housing bubble is all of the supply chain disruptions we've had due to the pandemic and corporations seemingly buying up a lot more homes than usual throughout the United States. When the pandemic began all the way back in March of 2020, things were shut down for a long time, and that really affected the housing market because home building effectively stopped for months, and eventually it started back up again, but we had all these supply chain issues. you couldn't get all of the materials you needed to build your house fast enough because a lot of the materials don't come from your own backyard. They come from other countries or other states. If those other states and other countries are on pretty serious lockdowns, then you're not going to be able to finish your home, which means you can't live in the home, which means the home can't be sold. Now, we have started to build more homes in the United States, but home builder sentiment is down. Home builders just simply can't build enough homes to meet demand right now. And the price to build a new home is increasing because there's so much demand and not enough resources, making brand spanking new homes in the United States extremely expensive for most Americans. And of course, there's investors and big investment firms buying up so many houses across the United States. Investors are now buying 33% of all of the homes that are currently on the market. That is a 5% increase from what we saw a decade ago. And across the board, these investors are simply just buying homes initially, putting in some very small fixes on them, and then reselling them for a way higher value. That is pushing the price of homes even higher, and most Americans simply can't afford that. And the bigger issue is most Americans cannot outbid an investment firm or a big retail investor. Investment firms and real estate investors can buy these homes at a lot lower of an interest rate because they have way bigger assets and way bigger wealth, and they are seen as a less risky investment than just your average buyer. Your average buyer has a super low net worth, so they're going to have a lot higher of an interest rate. That's because they're a bigger risk to these banks who are giving out the mortgages. So a bank is way more likely to give a lower interest rate to a financial institution and an investment firm because they have way more assets that if they weren't going to pay off that mortgage, they could sell some of their other assets in order to do so. And again, all of this has pushed up the housing market beyond fundamentals. None of this should really make sense. Eventually, buyers should simply disappear from the market. There shouldn't be so many people still buying homes in the United States, but the fear of missing out is really pushing people into homes right now beyond their means. Now, of course, I want to mention here that back in 2007 and 2008, when we had the big housing market crash, there were not nearly as many safeguards in the industry as we have today. Banks and financial institutions were giving out what was known as ninja loans at the time. No income, no job, no asset loans. So you could basically get a six-figure mortgage without actually proving that you can pay that mortgage off. And a lot of Americans had adjustable rate mortgages, which means they got in at an extremely low interest rate, but over time, that interest rate went way up and their financial means couldn't support paying off a mortgage. Banks and financial institutions of today have a rigorous process to make sure that you can afford a mortgage, but what they've been doing is pushing Americans to the very edge of their comfort zone. So yes, pretty much all of the Americans who have been buying homes over the last 2 years can technically afford them. But that doesn't take into account inflation in the United States. I mentioned it before, but inflation is massively eating into everyday Americans' budgets on a regular basis. They're spending a lot more on groceries and gas right now, and that's not something that they can get around. Sure, they can try to invest more in order to beat inflation. Sure, they can go out and get another job that pays them a lot more in order to hedge against inflation too. But that is not going to help them right this second. And what if they're not able to beat inflation with their investments or by finding a new job? If they're going to live in this economy, then they have to pay the price of things. But eventually, the price of things is just going to get way too high for them to pay, which is going to affect the stock market because now businesses are losing profits and revenue. In February, there were 25,000 foreclosures in the United States, and the total number of mortgage delinquencies and foreclosures hit 1.95 million, a 541% increase from the same time last year. Delinquencies are mortgages that are past due for 30 to 60 days or more. Part of the reason for this is because financial stimulus and aid from the federal government is completely gone. Like I said, the mortgage moratorium program meant that mandatory mortgage payments and rents were paused throughout the United States. Americans now have to pay their mortgages, and a lot of them are in way over their head because they bought a house that they could barely afford. Credit card debt and debt in general in the US is going up. It means Americans most likely spent all of their extra cash on things that they probably didn't need over the last 2 years, or definitely needed because inflation was going up and they have to buy their basic necessities like food and water. Not only that, but inflation is going through the roof, meaning that even if they could afford a home, well, now they're spending even more. And remember, even if your mortgage payment is fixed, you're still going to have to pay more money for your house every single year because taxes are going up. As property values continue to rise, the taxes you pay on your home are also going to go up because the surrounding properties will have a pretty huge influence on what you pay in taxes in general. So now many Americans are in a situation where they could barely afford their mortgage before, and now inflation is going up, so they have to pay a lot more for all of their basic necessities. Interest rates are starting to rise, so all of that credit card debt that they have is also getting more expensive, and taxes are going up too. So how are Americans going to be able to afford their homes? Well, some of them simply can't. Now, I will say this could be a potential good thing for the housing market because that means there's going to be a lot more homes on the market, and when a house goes into foreclosure, banks want to try to sell it for whatever they can get out of it. So that might mean that housing prices and taxes eventually start to go down in the United States. For our economy though, this is not good because Americans now have their credit hurt and they still have to pay all of their debt, and inflation is still going way up. Inflation can't be fought even if you file for bankruptcy. You still have to buy all of your basic goods and services. So what exactly does all of this mean for the future of the housing market in the United States? Well, the fact of the matter is, the Federal Reserve of St. Louis and CNN believe that we are in a housing bubble. Fundamentally, it just doesn't make sense why Americans continue to just buy homes while their wages aren't really increasing. They're not really getting any money from anywhere, which is a dangerous situation if inflation continues to go up, taxes continue to go up, and the cost of living simply rises in the United States. All of these homeowners are not going to be able to afford their homes anymore, meaning more homes could come on the market, but that's only a short-term solution. Eventually, I believe that all of the supply chain issues in the United States will improve. We'll have a lot more supply to meet demand, which means prices and inflation should start to slowly drop in the US. The Federal Reserve is raising interest rates, which is pricing some people out of the market already, meaning you have less buyers. But eventually, saying the market is in a bubble implies that that bubble is going to pop at some point, meaning the housing market is going down, and I firmly believe that eventually the housing market is going to drop. Now, I'm not sure if we're going to see an outright crash simply because wages are starting to improve and eventually inflation is going to drop in our country. The fact of the matter is, Americans aren't really going to be able to afford their houses anymore. What that could lead to is more Americans re-entering the market because they want to jump in and buy those houses, but it could also mean that investment firms buy more houses. There's still a lot we don't know about the housing market, and it is notoriously difficult to predict. But according to the Federal Reserve of St. Louis and CNN, the housing market is in a bubble. Now, it's a small bubble and it's slowly starting to grow larger, and eventually it's gonna pop. But now I want to hear from you on this issue. What do you think about the Federal Reserve of St. Louis and CNN saying that a housing market bubble is currently brewing in the United States? Do you think they are right on for this, or do you think that a housing bubble is not what we're seeing right now, and eventually the housing market is going to naturally level itself out without a crash or a correction? Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out uploads 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.